You heard Marko Kolanovic, too exceptional. I want to talk about what you're looking at, though. You have a lot of younger clients, people, millennials. They have longer investing horizons. What are you advising them when it comes to mega cap tech? We're going to show a chart here with some of the big moves when it comes to these stocks. Right now, is it time to take profits or hold on for more?
Yeah, I think, if you're looking specifically at the semis and some of the plays that have been really tied to AI, I think this might be a good time for people to take profits. You look at people that invested since the beginning of the year and say a name like NVIDIA, that stock has done tremendously well since the beginning of the year. And if you look at their last quarter print, they also had a strong print as well as guidance. Now, I do think the run-up has been kind of extreme. And I think for those investors, if you're looking at sort of risk management, there is now an opportunity for investors to potentially take some profits off the table and leave a little bit of their position long, because it is kind of an extreme run, especially in a name like that. And there's going to be some volatility going forward, especially as we get into the summer. And we still have a lot of data on inflation, on jobs, and what the Fed is doing. But that would be my position when it comes to some of these names that have run up a lot since the beginning of the year.
All right, so big run-ups. Maybe it's time to take a little bit of money off the table. I want to talk to you about a sector that we're going to talk about later in the show, but I know you're watching it. Retail. So if you look at the e-commerce numbers, they've been relatively strong all year. They've seen double-digit gains for the months that we have data from. We use MasterCard data here. So what are you seeing when it comes to retail? How do you feel about retail right now? Is it investable? And what are you looking at?
Yeah, retail is interesting because if you think about, a lot of the projections from the beginning of the year is recession. And obviously in retail, you're looking at the consumer struggling, that might not be a great place for investors. But I think there's a strong point and a silver lining for investors that are looking for retailers that are doing well, especially online. So a company that we looked at and like is Lululemon, which had a solid quarter last quarter with $2.8 billion in revenue. But what was the strong point of it is their store sales. But if you look at direct to consumer, that was up strong. And that's an area where they're adding strength. It makes up 52% of their business. And I think that's a strong suit when you're looking at retailers right now, is how they're connecting with their consumers directly and how well they're doing online, as well as, growing same store sales and adding new stores. So Lululemon's done well on that front, and management's done really well on that front. So that's the bright spot that I like to look at when I'm looking at retailers, especially in this environment.
All right, so we're going to talk about something that's not necessarily as sexy as some of this other stuff, bonds. The yields are still elevated. I'm looking at the 1 month right now at 5.11%. What's your view on bonds? Are you putting money in short bonds, long bonds? What do you think about it overall?
Yeah, Frank, it definitely is sexy, and especially for younger investors when they're looking, all the time for growth and equities in different areas that are, high flying. But, at some points, and this has been a long time where, a lot of people have looked at bonds. And I think, if you look at the data, it's like roughly around 2007 that it's so interesting to kind of look at what bonds are doing. But short-term bonds right now are a great place for investors in the short term to hide out, especially if they're waiting out the volatility or if they took some money off the table in growth. And obviously, since you have an inversion right now, if you're looking at short-term bonds, you don't need to take on any longer duration risk by looking out further. But maybe those short-term bonds are areas where folks could sit in for a little bit and catch some income.
So, Dylan, I want to be clear. So when you say short term, are you saying 1, 2 month, 3 month? I'm looking at the 6. The yield on the 6 is higher than the 1 month. Are you looking at the 10-year to lock in that yield for a longer period of time? Exactly what are you looking at?
Yeah. And if you don't believe that, rates will get any lower on a 10-year or any of those, I would look into 1 to 3 month. That's what we're looking at, right? And that gives us flexibility. You can lock in, and if someone that's buying municipal bonds, you can have a different tax strategy there as well. And so that's what we like to look at, is that short-term range right now for investors.